Hello guys, good afternoon. Welcome to another daily market review. Today's date is September 9. Um, so we had an up close day, but the New York session overall was seek and destroy. As you guys can see here, run on buy stops, run on sell stops, and then buy stops again. Very large seek and destroy day on a no news Monday, but the ranges were big. So on the lower time frame, it offered actually setups, good setups like the shorts over here, which is on the 15-minute relatively equal lows. 100 points, 120 points, which was good. But the PA after was, I believe, it was more so for to generate more liquidity, right? So we are in a very volatile territory, and market is building up liquidity to run on later in a low resistance run. But let's take a look at what happened today on the intraday basis. So first things first, if you watched the video from yesterday or check my channel from the annotations and all that, hold on, let me go on the 15-minute first. I made the buy side liquidity on 15-minute, which is relatively equals, as a potential draw on liquidity, which was rated during the overnight, like during midnight, it basically rated above it. I also mentioned the 15-minute fair value gap here, which was flipped before New York open. And the second area of potential pullback that I was talking about was the daily BC, now that it's an inversion fair value gap, that I was thinking about it could actually trade up into that as a retracement and keep going towards the drawn liquidity. Right now we're trading into that daily inversion fair value gap, and the fact that today's retracement is actually closed above Friday's 50%, Friday's range EQ, is actually indicating me more strength than weakness, because I actually wanted to see more weakness, and I wanted to see market not even reaching up into the Friday's 50%. I was thinking about it fails there or before. It didn't happen, so we'll see what happens afterwards. But another thing, I was talking about the BPR. Let me go on the 4-hourly. Here, this area below the sell side, I was talking about this level BPR, as it could form, or it could cause a major pullback. Not a major, but a big pullback. And right now it seems like at Friday's close, it rejected off of that. Body closed above after taking sell side. So the initial rally is technically okay, it's permissible, but how far can it go? I don't know yet. We'll see. We have to go step by step. We gotta look at intraday, we gotta look at different time frames, daily closes, and all that. For now, as long as it stays below the daily inversion fair value gap, maybe the CE of it also, I'll be remaining bearish, and I'll be looking for targeting the sell side and the weekly, basically the weekly low. So there's no reason to fight the trend though, intraday speaking. If the 1 minute order flow is bullish, it is bullish. You gotta go with the trend, or don't trade, just wait for a short setup. You can do either or, it's all up to you. Like for example, today for me, I did not participate in the longs. I took the short, and then I saw a long setup, and I choose not to trade it. So it's all up to you. You can trade both sides because it's a large range. The market is highly volatile. It offers good setups on both sides. Whichever is easier to see for you and offers you the best setup. I'll be talking about in a minute, when I drop down to 1 minute, about what I'm actually looking for, like precisely looking for. So you can potentially like work it around those things as well. So let's take a look at the 1 minute. Alright, let me delete all that. Alright, so the first thing I want to mention is the NWOG. Okay, this is going to be highly important level for this whole week. Okay, guys, the reason being is the NWOG low, there's a void there. Okay, this is a liquidity void here. It delivered inefficiently, market orders lacking here, and it's going to act as a drawn liquidity for the week. Okay, I don't know which day it's going to get down there. It could be tomorrow, it could be Wednesday, it could be Friday. I do not know that. But whenever market leaves NWOGs and dogs open like this, it acts like it's just like drawn liquidity, and it usually runs very fastly. Okay, so New York session. Here are the key things that I was looking for during pre-market. Okay, first things first, I was looking for the equal lows from overnight session. There's this one, there is this one, clean lows over there. There's this one right here. And what else? There's this one here. What else? Alright, so far that's it. So those were my potential targets for today. So that was the first thing I did. Okay. The second thing was during pre-market, what I've noticed was, so market dig up, sold off, displacement, right? So it's in market maker sell model. How far can it go? It should take at least one equal lows. Here it tags, it purges one and goes for this one and stops there. And that is very important because once it stops there, so this is 8:30. Okay, what happens there is market trades up into a buy side liquidity, basically turtle soups it, forms an order block, comes down, engineers liquidity here because leaves equal lows, goes up one more time, digs down, sell side is purged and displaces. This is a long setup, guys. Okay, this is basically power 3. Once this formation is here, sell side is purged, there's an order block, breaker block, and displacement. ICT 2022 model. Once this setup is there, or this formation is here, it means the market is in buy model. Okay, and also along the way, more importantly, what it does is it takes this liquidity and this liquidity here. Okay, so it has confluence. Once it does that, what I look for is the opposing side, the buy sides, right? So we have single highs here, single high, and here relative to this high, it's relatively equal. This is equal highs on the 15-minute though. I'll showcase that here. Not equal, but relatively equal, and that's the only buy side liquidity. So my eye went up there for pre-market before New York session opens. So let's read that order flow first before I get into the actual New York session. So here, displacement, this is the OB or breaker block, whichever you want to use. It's the same level anyways. So market displaces and comes down into the breaker block, displaces above the first buy side, forms these fair value gaps here. There's also a new breaker block here, right here, comes down, displaces, and tags the drawn liquidity. Okay, this all happened during pre-market, and some portion of it was the opening range, meaning it tagged it before 10 o'clock here, 9:33. So once it completed, I was thinking about market could actually fail here. This could be the Judas swing, and we could go for these sell sides. Along the way, it formed this equal lows. This candle has no wick, and the rest in London session, and these lows. So in that accumulation above the buy side, I was thinking about market might form a market maker sound model to rate these levels. It didn't do it, but what it did was, so this is the fair value gap, right? What it did was sell side raid. Here it failed. That was, I believe it was an SMT divergence. Let me just check it out real quick. It doesn't matter if it was an SMT or not, but if it is, yep, it's an SMT divergence. But what it also does is, so first of all, bullish SMT divergence indicating buy sign, but what it also does is it forms new sell side liquidity. Now these lows are relatively equal, right? So it digs up, forms a new displacement, digs one more time, shallow moves, but digs one more time. Here it formed a bearish SMT divergence. I was like, okay, this is it. This was the last buy side that Nasdaq wants to take. Now it's gonna rate this low here, here, and here, and ultimately maybe NWAG. That's what I was thinking. But what happened was the bearish SMT caused the displacement. I was like, okay, this is silver bullet. Tried to dig down into this sell side, but didn't take it and rejected the fair value gap. That's indicating bullishness because it's just IFEDing. What it does here is the SMT divergence, instead of engaging with the sell side, it actually formed a new relatively equal lows. Basically what it means is it's engineering liquidity or building sell side liquidity. Okay, now once it gets into market maker sell model, this is going to be a target, this is going to be a target, this is going to be a target, and this is going to be a target. Okay, so here rallied, formed a huge fair value gap, and this is the old high. Immediately after, it formed a SIBI. The SIBI was IFED'd, indicating weakness, right? Indicating weakness. The CE of this big fair value gap was lost, and it was retested. That's a short. If you have the narrative, okay, if you have the drawn liquidity, that's a short. But for me, that's a short because we have so much sell side liquidity, and the move here was, it looks like a fake move. It's so fast, and it already did some damage on the buy side. Not an easy PA though, definitely not an easy PA. And we are also in the daily inversion fair value gap, which means market is in technically premium. So it sold off, displaced below or outside that BC. Here, this is basically, let me just annotate this, buy side liquidity purge. Here, displacement, there's a breaker block here. Let me annotate that as well. The breaker block, the price couldn't even reach up into its CE of the breaker block. Sold off, purged the liquidity, the first one, the second one, and then from there it formed this OB here. Order block was used. Let me annotate this. This was the only setup that I was interested in, by the way. The rest I was not interested in. So order block was used to reprice down here and here, and so let me just take a look at this. Breaker. The order block sold off, made a huge displacement right here. You know what, let me just annotate it this way. Here IFED'd into the SIBI and repriced down into these lows and the other lows from the morning set, from the London session, came all the way down into these lows, which is relatively equal. I thought it could go for NWAG low, but once you see the reaction, you'll understand why it stopped there. So let's take a look at it. So the equal lows got tagged here. It's the same deal as it happened right in this price action during pre-market, and these are the signatures that I look for every single day, basically, guys. How price reacts after engaging with sell side or after engaging with the buy side. So here there was an SMT divergence up there with the IFED, sold off, turtle soups, sold off again, displacement, this is the SIBI, completely filled, sold off one more time, and tag the equal lows. Once it tag the equal lows, it's also running this low. It's also running short-term or minor sell side liquidity accumulation here, and flipped with a displacement above these highs. What that means is now the state of delivery has changed. The market or the algorithm is in buy model. Once it displaces above this high, the sell side, you should be closing your short positions, because what it's going to do is it's going to either go for the range EQ of this range, okay, or it's a reversal. In this case, it was a reversal. Why it was a reversal, I don't know. I did not expect it to be a reversal, but it ended up being a reversal. So here, let's read this order flow. But again, you could trade both sides in this volatile market. Here's the manipulation below sell side, tagging minor sell side and the equal lows. Displacement V shape basically. This is the breaker block. Didn't get tested, but here this is also a breaker block on the 5 minute. Let me just switch to 5. You can see that sell side was taken, displacement above this high, forming a breaker block. Here, 5 minute breaker, which means the price is even more strong. What I mean by that is, instead of, so here we have a 1 minute breaker and a fair value gap down here, which ended up being a breakaway gap. What does it indicate to you? For me, it indicates the 1 minute PD area is not retested, but instead market used the 5 minute, which is above, so it's stronger than it I thought. So it was stronger than, more than, it's indicating strength basically, because it's leaving breakaway gaps. And there's displacement here, which is basically a unicorn model. That's a long. It went all the way up. So here in this price action, let's read the order flow. This is the order block. We tested the mean threshold. Displacement again, IFED into fair value gap. Now the market will not stop until it gets up to the range EQ, okay, or the buy side liquidity, which is right here. I don't like this trade, this buy side delivery, because the draw on liquidity was not clear. For me, when I saw this power of 3 here with the breaker block, order block, and all that after taking the sell side, I'm like, okay, the algorithm is bullish, turned bullish. This is a market maker buy model. Where can I take a long, and where can I target? That was the part made me not trade this move. For me, I want to see relatively equal highs or like relatively equal lows to target. Here it's just a singular high, so I just skipped this one because I don't know if it's gonna fail at the range EQ or not. So in this case, if I long the first SIBI or the breaker, the reward will be 29 handles only, because again, it didn't have to flip the range equilibrium. It has no reason to go up here technically. But anyways, let's read the order flow. So, and again, displacement here, fair value gap, retest right about here, or just more rally. So in this case, also look at the sell side. So when you're bullish, you have to be aware of the sell sides and how market is rejecting the sell, or whether it's rejecting or not. Here, as you can see, the first manipulation below sell side, and here it's second manipulation below sell side. They all ended up being wicks or turtle soups basically, and market repriced up here to the buy side. The rest here, I think, is, although it moves, I think it's just time decay or market generating more liquidity. But let's read that order flow as well. So the buy side was taken, price stalled here. I believe it formed a bullish bearish SMT divergence at the highs there. I might be wrong, I was not watching. Yes, there's a bearish, I believe there's a bearish SMT here. Yeah, it doesn't look like an SMT to me, honestly. I mean, lower time frame maybe, but there's a trap. Fake bull flag. Flipped it. Retest the fair value gap, or also the order block, which is this candle right here, and it sold off, caused the displacement. This is the breaker block. Came into the premium portion of this range, which is here. The premium portion. You should be disregarding the discount. Okay, if you think you're missing out, don't take it, because even if you take this trade within discount, your stop loss has to be up here, because that's the order block, which is 30 points. So just wait for the discount, or I'm sorry, the range EQ or the premium, and take that instead, because the risk will be much less and you're gonna get more impulsive moves. So it traded up into the premium fair value gap and a breaker block, sold off here one more time. This is basically what we have on the weekly, by the way. This is how it looks like. But anyways, here another Sibi filled completely, also turtle souped. That might be SMT actually. Let me check that. Yeah, it's an SMT divergence in the turtle soup. That's the short as well. Or if you're pyramiding, that's a pyramid. Went down. There's this little tiny fair value gap. Never got it got retested, and that's a high probability short. Why? Because first of all, there's a fair value gap. Secondly, while it's reaching up into that fair value gap, it is running on equal highs. So you have this high and this high on the 1 minute. It's actually purging buy side. So this is basically ICT 2022 model as well. Displaced. Displacement. This is the 2022 model entry. Caused the fair value gap. Fair value gap retest, and it sold off one more time to take the short-term sell side and reversed from there. And the rest was choppy price action. I'm not going to read that ortho. I'm just going to mention the sell model's objective. So if you look at this, the buy side of the curve, okay, what I'm noticing is there are high probability targets. Okay, first of all, this low here is not a high probability target. It could reach there, but ideally, or technically, the reason of the sell model is not to engage with that low. It could get down there though. I'm not saying it doesn't have to, it can't or anything like that, but it could. It didn't, but the high probability targets are always the equals, guys. Okay, so first let me read that those lows here, relatively equal. Here, relatively equal. What else? Seems like that's it. So let's see what happens after price engaging with these two sell sides. First, tags it, and that's when it pulls back the first time. The second one, it tags it and wicks, and it kind of chops a little bit up here. It could have rejected here as well and turned up bullish from there. It didn't do it. It digged more, but it's, you know, it happens. So for me, the moment I see this equal lows getting tagged, I wait for a displacement. Okay, if there is no displacement, I collapse the trade. If there is displacement, I use order blocks, for example this one right here, for stop losses. Okay, I roll my stop loss above this high after taking the buy side. Okay, this should not fail. It failed, and look what happened afterwards. This becomes a breaker block, power of 3, and this whole price action in between here, this chop, time decay. Here basically breaker block, retest. I mean, let me put it this way: sell side taken, displacement V shape, disregard this PA. Displacement comes down into the fair value gap, retest the breaker block and fair value gap, unicorn, and reprices to the buy side, relatively equal highs. Okay, so I know what's gonna happen tomorrow. I think tomorrow could be another up close day. I am thinking about a bullish or a bearish order block here, 2 consecutive up close candles. But ideally, it does not. It shouldn't violate the BISI on the daily. Okay, so have this BISI on the chart, annotated CE. I would love to see it failing at the CE. Annotate its high low, and also keep this inversion fair value gap on the chart, because as you can see, the CE of that inversion fair value gap also aligns perfectly with the daily SIBI. So that's a highly sensitive level. I'll be watching it closely. I would favor a lower time frame market maker sell model forming within the CE. If it violates it, I think we're looking at this volume bounce from Friday. So we just gapped up, by the way. So anyways, guys, hope you find this insightful. I'll talk to you later. Have a good one.